Hello and welcome to the June 2022 Capstone Fund 5 video report. Remember, this is for cash collections of May 2022, accrual of April. This month we returned a 10.48 return to all you investors. Really happy about that. We had about 6 loans pay off and funded quite a few actually as well. So we got some more money deployed. Felt really good about our loan origination volume, and the team here at Capstone getting some loans done and closed. Had a really good month in regards to new activity. We had cash flow available to distribute of $121,000. That's how we were able to get everybody that 10.48 return. Again, real happy about it, and we're looking forward to this next month. Fund 5 equity for last month actually grew to just over $12 million. We had some new investment dollars come into Fund 5. Excited about these new investors that you guys have been introducing us to and referring us to. Keep up the referrals with friends, family, associates that might be interested in Fund 5. So we're just over 12 million, and we're looking to get up to 20 million here as our next benchmark. National news. Of course, the Fed is raising interest rates. First article here off of Yahoo Finance. The writer is citing some sources talking about how housing prices and housing inflation cooling down to about 10% and even a little less than that over the next 2 years. So we're probably going to get back to a 5 to 8% appreciation rate in the housing market fairly quickly here. So that's one of the first articles we wanted to point out. The housing market is not looking like it's going to take a crash. House prices are not going to start dropping significantly. Just the rate of housing appreciation getting back to a more normal rate and a normal amount of buyers in the market, and maybe some of that inventory starting to build back up so it becomes a little more balanced market between sellers and buyers and getting a little more healthy in terms of balance in our housing market. So that's good for us. A little more predictability in the market. Houses not getting overbid dramatically, less frenzy. Hopefully we'll still have somewhat of a soft landing in the economy like the Fed's been driving towards. You know, of course, everybody has their opinion there, but just wanted to report on that article a little bit. So give this article a read. It's fairly realistic, I believe, in terms of its projections. Another thing to remember when we're talking about the Fed raising rates is that the 30-year consumer mortgage actually follows inflation quite a bit, and not only the Fed rate. So when the Fed raised interest rates 75 basis points last week, the 30-year fixed mortgage actually dropped an eighth. A bit counterintuitive, but when you're thinking about the 30-year mortgage following inflation and the Fed fighting inflation with raising rates and cooling that off a bit, then it starts to make a little sense if we start thinking about the 30-year rate following inflation a little bit, as well as the federal cost and funds. So when the Fed raises rates, it doesn't automatically affect the 30-year mortgage as we would think, you know, with a knee-jerk type of reaction. So Fund 5 is still making loans. We had good activity last month. We're lending into a lot of these second and third tier markets, as we've talked about over the last 6 months to a year in these videos. The last article we want to point out, again, talks about the affordability in these second and third tier markets as opposed to, you know, traditional places where, you know, real estate reporters are talking about Seattle, New York, Los Angeles. So again, we're focusing on places like Rochester, New York, Syracuse, New York, Jackson, Mississippi, Dayton, Ohio, Raleigh, North Carolina. Those types of places is what this article that we're gonna send you in this video talks about. So still focusing on those second, third, even fourth tier markets where home affordability hasn't gotten so out of reach for first-time home buyers. So have a great rest of June. We'll get back to you again next month. Remember, we are referral only. So keep up the good work in sending us your friends and family and associates that might also enjoy these types of returns. Proven results, pretty easy money. You get these great videos every month. So give us a ring if you know anybody that might want to get into Fund 5 with you. Again, the more people in Fund 5, the better momentum we have and the better returns we can keep coming in. So again, thank you so much for letting people know about Fund 5. We appreciate it. Have a great rest of your week, and we'll see you next month.